What's up everyone, PK Investing here. Last week, my favorite stock made a huge power move. Healthcare sector titan Johnson & Johnson agreed to buy Momenta Pharmaceuticals for a whopping $6.5 billion. Momenta is a biotechnology company whose goals are developing treatments for rare autoimmune diseases. For those of you who don't know, an autoimmune disease is when your own immune system targets functioning parts of your own body, thinking those parts are harmful. Momenta currently has the rights to nipocalimab, a best-in-class antibody that has the potential to result in the creation of treatments for various autoimmune diseases. This acquisition greatly bolsters J&J's already excellent pharmaceutical arm, Jnj Pharmaceuticals. As a side note, I can't help but wonder why Johnson & Johnson don't just rename Jnj Pharmaceuticals to Janssen & Janssen. You know, for consistency. One thing that really blew my mind was the sheer scope of the acquisition. Let's put it in perspective. Say that you own a food business and you need a good source of bread. You go to a local bakery and offer to either purchase their bread recipe or just strike up a deal where you get a lot of bread at a discounted price. This would have been the same as Johnson & Johnson wanting the rights to one of Momenta's products. Now, say you go to this bakery, and instead of just buying their bread recipe, you just outright buy the whole bakery and incorporate it into your own business. Now, not only do you have their bread, but you also have access to their bakers, their recipes, their prototype goods, and every single product that bakery makes. This is what J&J did. Not only do they now have full global commercial rights to nipocalimab, but they've purchased the entirety of Momenta's team, portfolio, and pipeline. That's amazing to think about, and it only makes me want to buy more shares of Johnson & Johnson. Alright, J&J expanding is great and all, but let's talk a little about how much this is going to cost. As I mentioned before, both parties agreed to an all-cash transaction of $6.5 billion. But did you think J&J just took a $6.5 billion bill and slapped it down on the table? No way. You see, Johnson & Johnson is one of only two elite companies to have a AAA credit rating. The other is Microsoft, another favorite of mine. But Johnson & Johnson leveraged that perfect credit rating to cheaply borrow $7.5 billion in funding. That's $1 billion more than they need. J&J agreed to pay $52.50 per share of Momenta, which is a 70% premium, but they certainly have the resources to back that purchase. And in my bullish opinion, the addition of Momenta to J&J's ever-growing arsenal is going to prove extremely valuable in the coming decade. And it gives me another reason to keep on loving Johnson & Johnson. Let me know what you guys think. Do you think J&J made a good choice? What company do you think they'll acquire next? Only time will tell. Take care everyone. I'll speak with you again real soon. I'm not a financial advisor. Investing always involves risk. This video was created for entertainment purposes only.